In this video, I'd like to demonstrate how to accurately draw your support and resistance levels to ensure your charts don't end up like this. Support and resistance, also known as key levels, are crucial aspects to master in trading. Yet, 99% of traders still struggle with them. Why are they so important? Because identifying key levels correctly can present high-probability trading opportunities with a greater chance of success. Take a look at this example right here. There's a clear resistance level indicated because the price reached this point and then reversed downward. Therefore, the next time the price hits this level, there's a very high chance it will reverse downward again, presenting an entry opportunity. A common mistake traders make is drawing too many lines on their chart, just like this. How can you trade with so many lines cluttering your chart? It only adds confusion, whereas the whole purpose of drawing key levels is to simplify analysis and reduce confusion. The reason many of you are still making mistakes like this is because you're not following the secret rules of support and resistance. The first rule involves multiple rejections. In this example, the price reached this level 3 times before reversing, showing us multiple rejections. Hence, we can draw a support level here. Additionally, every time the price approached this level, it consistently rejected and reversed, indicating another resistance level. Now, you might wonder what to do if the chart doesn't show multiple rejections yet. This leads us to the next rule. The price needs to move away from the swing low or swing high. In this example, although there aren't multiple rejections yet, you can observe that the price originated from a swing high and moved significantly away from it before reversing. Hence, you can draw a resistance level here. Here's another example. Prices are gradually declining, but then quickly spike upward. In such cases, you can draw support levels at these swing lows. The next rule states that a level can function as both support and resistance. Support can transform into resistance, and resistance can transform into support. You can draw a support level here because the price reversed 3 times in this area, and whenever the price returns to this area, it consistently bounces back up. Therefore, there's a very strong support level here. Now, observe what happened when the price broke through this support level. It returned to retest this level. Consequently, your former support level is now acting as a resistance level. Currently, you can see that the price is struggling to surpass this resistance level, which previously served as a support level. Next, the levels must be close to the current price. When marking a key level, you don't want to select one that is too far away from the current price. Take these 2 levels, for instance. They're irrelevant because they're distant from the current price. There's no point in drawing them since we only want to focus on levels that matter right now. Too many lines can make the chart confusing. In this case, I'll simply draw a support level here. You can observe that whenever the price reaches this level, it consistently reverses and heads back up. Additionally, I'll mark another resistance level here. So, these 2 key levels are the only ones that matter. Now that you've understood these 4 secret rules, let's apply what you've learned through the charts. In this example, I'll draw a resistance level here because whenever the price returns to this point, it consistently reverses. This indicates multiple rejections, making it a very strong resistance level. I've chosen to place it there because it's near our current price. It's not too far away like the levels way up here. Being close to our current price means we still need to consider this resistance level. Additionally, you can observe here when the price significantly moves away from our swing high. I'll also draw another support level here because whenever the price reaches this point, it consistently reverses. This demonstrates multiple rejections at this level, making it a very strong support level. At this juncture, the price finally breaks through our support level. Look at what happens next. It returns to retest this support level, which now functions as our resistance level. And guys, I want you to understand that this entire area here constitutes your support area. Alright, remember, support and resistance aren't just single lines. This entire area represents the support area. That's why when the price comes back up to retest, it doesn't aim for a specific level, but rather retests the whole area. You can observe how the price returns and rejects this entire resistance area, which previously acted as support. Here's another example. You can see multiple rejections here because whenever the price returns to this area, it consistently reverses and heads back up. This demonstrates a clear support area. So, it's evident that this is a resistance area, and this is a support area because they fully satisfy the rules we discussed. But do you want to mark a level way over here? No, because that's not where the price currently is. It's irrelevant, it's too far away from us right now. It's ancient history. So, we don't need to concern ourselves with those levels from maybe 10 years ago, or even just a year ago, or a few months ago. Alright, I really want you to focus on where the price is right now. Concentrate on drawing the most recent key levels like this. The only time I'll draw this support level here is when the price breaks through this support level and starts to decline. That's when I'll draw the support level. But if it's still within this consolidation, within this area, you shouldn't draw key levels that are far away from the current price. Now that you've learned how to identify support and resistance levels, how do you actually trade them? In this example, I've marked out a resistance level around this area, because whenever the price reaches it, it consistently gets rejected and drops back down. So, this is clearly a very strong resistance area. The first thing you want to look out for at this key level is to observe what the price is doing. Is it going to break past this resistance level, or is it going to reverse and head back down at this support level? So, in this case, the price actually formed a bullish pin bar candlestick pattern. This pattern essentially indicates a bullish continuation, suggesting that there are many buyers in the market, signaling a strengthening upward trend, and prices are likely to rise further. By the way, there are numerous reversal candlestick patterns available, so you can choose whichever you prefer. Personally, I favor the doji, engulfing, and pin bar candlestick patterns because they're easy to identify. Observing such patterns in the major resistance area is the first sign for me that prices are likely to continue rising. However, we don't want to enter the trade immediately upon seeing the bullish pin bar. We prefer to wait for multiple confirmations that indicate a genuine continuation. The next thing I noticed at this resistance level is the bullish gap formed after the bullish pin bar, which serves as the next confirmation. I'll place my stop loss below this support level. Remember, in this support and resistance strategy, it's essential not to set your stop loss too tight, because there's always a chance that the price might retest the area before moving up and continuing to rise further. Therefore, it's best to give your stop loss a bit of breathing room. I set my minimum take profit at 1.5 times my stop loss risk. Don't worry if you still don't understand it. Here's another example. You can see that the price is currently at this major support area right here. But we don't want to enter immediately when the price is at this support level. We want to wait for confirmation. Right now, we only have one confirmation, which is the price being at this support level. That's the only confirmation we have, so we can't just enter based on that. Therefore, we need to remain patient and wait. Now, the next candlestick that the price shows us is a bullish engulfing candlestick, a big fat green candlestick at this support level. What does that mean? It means that there are a lot of buyers at this key support level, pushing the price up. This indicates that the price is unlikely to break below this strong support level, providing us with a second confirmation. Now that we have our two confirmations, I will enter for a buy right here. I'll place my stop loss once again below this support level, and if you look at the resistance level above the current price, you usually set the profit target in that area, which is, in this case, this resistance level right here. Now, let's see how this trade plays out. I'll fast forward so as not to waste your time. You can see the price going up and reaching our take profit. We just need to wait, be patient, and bam, we've hit our take profit right here. Best support resistance tool. This is the best support resistance tool that I can use to determine key levels easily and quickly. With this tool, I will find the nearest key support and resistance levels to the current price. In this chart, the price is in the middle of the nearest key levels. We can easily find support levels based on these lines, this, and this. Then, we draw a blue rectangle involving these four lines. Similarly, with resistance levels, we can easily find them based on these lines, this, and this. Then, we draw a red rectangle involving these three lines. Now we have found the nearest key levels from our current position. It's very easy, quick, and, of course, accurate. Next. In this chart, the price is in the middle of resistance levels. The nearest support level can be easily found based on these lines, this, and this. Then, we draw a blue rectangle involving these 8 lines. Similarly, with resistance levels, we can easily find them based on these lines, and this. Then, we draw a red rectangle involving these 10 lines. Once again, this is very easy, quick, and accurate. So now, with this great indicator, you can definitely find the nearest key levels from our current position very easily. However, if you need this indicator in settings, I have already provided them in the video description column. I have included a template with a system that you can easily apply to your charts, automatically plotting all these indicators accurately. This way, there is no need for any additional complexity. Get the download link in the description. This support and resistance trading strategy is an extremely low-risk, high-reward strategy which can and will change your life if you use it properly. The only thing that could make this system fail over the long term is you not sticking to the rules. That's it. As always. If you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.